Good morning, everyone. My name is Wes Bremer. I am a CoC grants analyst, and on this call is also Megan Tanikunath, who is the CoC grants manager. She's joining us from Washington, D.C., which is kind of cool. And yes, this is our fifth training in the 2026 CoC training series. And today's topic is unit approval, the rent standard portion of that. So all things rent reasonableness, FMR, fair market rent, and utility allowances. So we're picking up where we left off in May, which was income calculations. Last month, Megan presented on all things NOFO, and this month we kind of pick up in the case manager's workflow again. So more on the content in a moment. I've pasted a note in the chat. This is being recorded already. We will send out the slides and other resources as well as the recording link. We encourage you to ask questions. So put your questions in the chat or raise your hand physically or virtually. Whoever is not presenting will probably be more attentive to questions. And we should have time for a Q&A at the end. When we've practiced this presentation, it takes about 35 minutes. So, all right, I'm gonna get started on the topic. So I want to be able to see you all as well as I'm presenting. Okay, all right, we're good to go. All right, maybe we could have been a little better with the title, unit approval. This is just one half of it. The other part of unit approval is housing quality standards and lead-based paint guidance. Nevertheless, we'll talk about these three topics here. We want to remind you that the main audience for this training series are the case managers who work in PSH, rapid rehousing, or transitional housing. PSH, permanent supportive housing. So we have 4 objectives, and we're hoping that all 4 of these things are very actionable for the case managers. First, that they'd be able to calculate gross rent for a prospective unit. Secondly, to verify that a unit's gross rent is rent reasonable. Okay, the second bullet point applies to everyone present. But the third bullet point, verifying that the gross rent is at or below fair market rent, and the unit is also rent reasonable. This applies to a lot less of the subrecipient awards in the Indiana balance of state. I should say those who are subrecipients of IHCDA. We have a nice visual on this distinction in 3 or 4 slides, so more on that later. And then the fourth bullet, if ever a utility reimbursement is in order, that the agency needs to pay that to the household. We'll talk about methods for doing so. And that should be a pretty short talking point. But yeah, I'm going to turn it over to Megan, who's going to teach a little bit on, instruct a little bit on gross rent.
Good morning, everyone. So first and foremost, gross rent is the total, right? Just like your gross income at tax time, gross is the total. That is the utility allowance for the unit in addition to the rent. And this is important following up on our 2 months ago presentation on income calculation, because once you have the income, then you have the maximum you can compare that with the maximum gross rent as well. So it's important to have that distinction when you are going through the calculations that we'll talk about. Just remember when we say rent, you need to know, are we saying gross rent? Are we saying, tenant rent? Are we saying um, a housing assistance payment? The reason you hear all of those different acronyms is because rent can cover a lot of different things. So the definition of gross rent specifically is the total of the utility allowance and the total of the rent. And then one thing that we'll show you here, or encourage you to do as well, is to find a utility allowance. You're going to use IHCDA's utility allowance schedule. And Wes, if you'll bring up that link for us. All right.
Okay, I can narrate this part. So yeah, we encourage you to use IHCDA's, well, we require IHCDA's utility allowance schedule. Um, a few quick notes about this document. Um, we have the current utility allowances, and we have this link for you in the follow-up resources we'll send. But be sure to choose appropriately between a single family or a multifamily residence. Here in a second, Megan's going to lead you through an example for Jackson County. That's why we've landed on this page. The counties are organized alphabetically. You can disregard this expiration date. I know it's misleading, but we confirmed with our real estate team that they devised this utility allowance schedule late December of last year, and it is good through all of calendar year 2026. The other footnote we had was on the even numbered pages, you'll see an internet utility. Disregard that because it does not apply for CoC. As Megan showed a moment ago, there are 5 CoC eligible utilities: gas/oil, electric, water, sewage/wastewater, and garbage/trash. However you want to refer to things, but there are 5 CoC eligible utilities. Yep, and that's utility allowance. Back to you, Megan.
Thanks, Wes. So things to remember with the utility allowance is in scenarios in which one or more of these are CoC eligible, are not included in the rent. That's when you're using your utility allowance. So if you have a unit that maybe it's an all-electric unit and electricity is not included, but tenants do have to pay, or trash and water is included. Keep that in mind. So you're using the utility allowance for that electricity, but not with the trash and water. That's going to be included in the tenant's rent. So again, this is utilizing that encourages or includes the gross rent and the client's share of whatever their rent payment or occupancy charge is going to be. This is an important point. Utility allowances.
Keep
Sorry,
going, Megan.
we'll take questions in a second. Utility allowances are not a limit or a cap on how much assistance a client can receive for the utilities. So if they receive other outside utility assistance, or like if you need to pay help pay for their utilities, there's other ways to go about doing that that can be above the cap. Alrighty. So first we're going to go through an example And this is primarily based on a multifamily unit or like an apartment complex in Jackson County. Unit itself, the rent is $9.50. This includes water, sewage, and trash and utilities. The unit has an all-electric appliances, no gas utility is needed, utility allowance for electric. So again, just reviewing that second bullet point, the unit's monthly rent is $9.50. That includes water, sewage, and trash. And it has all electric. So this is conveniently the exact same example that I shared in the last slide. No gas is needed. And we've got the utility allowance for electric is coming in at 183. So the gross rent is your 950 plus 183, which the total is 1133. And remember, this is gross rent. This is not rent. So you're going to take that 1133 to the rent reasonable range, or rent reasonable and FMR, depending on if you're using leasing dollars or rental assistance. And you're going to compare those two and determine whether or not this 1133 is rent reasonable.
Thank you, Megan. And yeah, we're going to get an even more concrete example of how to do that in a moment. So we're on to learning objectives 2 and 3, and we're going to look at a fork in the road. Okay, so a small reflection comment here. These trainings can be difficult because some of the content we share is one size fits all. You know, what we share can apply for PSH, RRH, or TH, all three. Other content, though, one size does not fit all. The response to your question will vary based on whether you're PSH, RRH, or TH. And then it also, as we're going to see here in a second, depends on how your project is budgeted. So far, we've all been traveling down this road together, and now we've hit a fork in the road. Okay? Most of us are going to veer off to the right. You know, the bulk of the sub-awards, the sub-recipient awards in the balance of state, they are funded through rental assistance funds. We're talking CoC here. Let's disregard ESG and HOPWA. Okay. Yeah. So if a unit is assisted with rental assistance, only the rent reasonable standard applies. However, if your CoC project has leasing dollars and you're using leasing dollars to assist that unit, both rent standards apply, rent reasonableness and FMR. So I just wanted to give you a little visual of the sub-recipients, and my apologies. There are some HUD direct recipients on here, and they are part of the Indiana balance of state too. So I regret that this graphic does not also include them. But for the sub-award, the sub-recipient portfolio, we had 34 projects, 34 housing projects, I should say, this past year. And 32 of them only have rental assistance dollars on their awards. Now, there are 2 of them, TH to RRH, projects where they take both leasing dollars and rental assistance dollars. So for those 2 subrecipients, and they're on this call, they have one standard for units assisted with leasing and another standard for those assisted with rental assistance dollars. Okay. All that is to say that mostly we're gonna hit rent reasonableness pretty hard in the time we have together, and give glancing mention to FMR. Okay, let's really get into where Megan left off. She showed us how to arrive at gross rent. Now, what do we do with that? Well, we compare it to rent reasonableness. So, documenting rent reasonableness, your first step really is gathering information on the unit. Which utilities are included in rent, which ones are not included in the rent, and then the appliances and their various energy resources. There are a few places where you can capture this information on the wrap contract when you're that page where you kind of profile or note the units, appliances, and utilities, or you can note it on the utility allowance schedule itself. But anyhow, step 2 is to generate a rent reasonableness PDF through affordablehousing.com. And we have a 10-page PDF with plentiful screenshots on how to go about this. So if you're new to affordablehousing.com, we recommend this resource. We will send it in our follow-up email. And also a little plug here. If you're a case manager or agency leadership and you don't yet have access, if you're unmuted, could you mute yourself, please?
You muted over there.
Okay, I was able to mute the person. Sorry, everyone. Generate, where was I? If you need access to this website, email us and me or Megan, and we'd be happy to get you access. So I'm going to pop over to the example, and it's kind of like bad cop, good cop. I'm going to give you an example of maybe what not to do, and then a better example. So here on this PDF, you're seeing a 3-page printout from affordablehousing.com. I used an example I knew. My friend used to live in this duplex in downtown Noblesville. Is built probably 1950s, I'd guess. Anyhow, I kind of remembered the specs on where he used to live. So I used that as my example. And the first 3 comparables that affordablehousing.com took were new construction, 2026 here, and they were townhouse villas as opposed to duplexes. And I know this area, it's close to State Road 37, where it meets Greenfield Boulevard. I know it's a nice area. So I knew, with my knowledge of this suburb, I knew that these weren't very good comparables. And so you can see that down here, I got a very inflated rent reasonable range. $1,659 to over $1,700. And my gross rent is $1,200 per month. So I did do one thing well here, though. I ran the rent reasonable valuation before the client signed the lease, which is the must, and it's a point that Megan and I will reiterate. So my big talking point here is that you have the ability to override affordablehousing.com. If these comparables truly aren't comparable, they're inflated, they're too low, then unselect the 3 and then choose appropriate ones. And this is my example of doing so. So you can see that I had to go a little bit beyond Noblesville. Well, I just selected these 3 comparables from the ones the website generated. But I got units that were more similar to the subject unit. These were built in the mid-90s. One of them is a duplex and not a townhouse or villa, and the square footage is a little bit closer. And because I got better comparables, you can see that this is probably a more accurate rent reasonable range, $984 to just shy of $1,400. And the gross rent for this unit is square in the middle of the range. So when Megan said you got to check that the unit is rent reasonable, you are desiring that the gross rent be at or below the upper threshold of the range. So that's what's meant by running a rent reasonable valuation. You are going to save this 3-page PDF in the client file. Okay, I think it's a good time. Yep, good to go back to the slides. Yes. Oh, Carol, thank you for that great question. Would putting the year built in the subject unit give it better comparables? Yes. And I tried finding the year of construction for my friend's duplex, and I couldn't find it on like Redfin or those other sites. That's why I left it off. But yes, this is why I love this question. The gathering information stage is so important. Like, I believe that page on the wrap contract does have year constructed. So if I do a really good job of gathering the information in step one, it will make my rent reasonable valuation even more accurate. So great question. And then this is just this starred bullet point is again reiterating that you must run the rent reasonable valuation before any lease signing or any wrap signing. Failure to do that could result in a monitoring finding from HUD and or IHCVA. And here are the regulations. No need to dwell on those. But. Okay, I'm going to turn it over to Megan, but just want to reiterate on that first rent reasonable valuation. Yeah, I could have manipulated things and gotten the client or household into a very expensive unit, but would I really want to do that? That's the question that Megan's going to answer for us.
Yeah, and Lisa asked a question in the chat that I think is also really pertinent to this. So if you notice the range is higher than the rent, is it required that you look for more comparable units or just preferred? I believe, Wes and Carol, correct me if I'm wrong. I don't think our manual requires it because I mean we really can't track it, like how many times I guess we can see in affordable housing online how many times you run the rent reasonable. I think it's important to get as close as you can. If you're getting units, like say you have a property that has like rent restrictions or rent it's like a LIHTC property that has lower rents than everything around it. That's one of those cases where you're like, okay, well, like obviously this is going to be reasonable, even if it is significantly lower than the comparables. So use your judgment on that. We're not going to say like, oh, well, whatever you chose is $500 less than everything around it. We don't think you worked hard enough to find a comparable. We're going to be like, heck yeah, you found a unit that's $500 less as long as it meets HQS. Great. So hopefully that answers that question. Now, I'm going to tell you all about a story. If Wes, you'll bring up the PowerPoint back up here. So an organization that I used to work for, we worked with, it was a really cool program. We worked with mothers who were expectant pregnant persons. So these people were in like their second or third trimester primarily. A couple were like ready to have a baby. And we who were experiencing homelessness, and we were tasked with moving them into permanent housing as quickly as possible. It was a 2-year program and it had progressive engagement. So for the first, I think it was the first year, um, we paid 100% of their rent. And then in the second year, it was like the first, 3 months of that year two, we pay 75, and then it went to 50, and then it went to 25. And then by year two, ideally, they were in a stable situation and could cover their own rent. We had a really awesome partner, a local real estate developer that does affordable and market rate units, a lot of them in the area. So they had a lot of properties. And we were only bound by Rent Reasonable because it was a CoC program. We weren't bound by FMR. It was in the donut counties of Indianapolis, which is also, as several of you know who are operating in that area, well, really all across the state, can vary widely from one area to another. What is rent reasonable, what is affordable, etc. So we had several units that we were able to move clients into that were in mm, not like full-blown luxury apartments, but like really nice apartments with high rent because we just had to run rent reasonable, and in an area where almost all of the apartments are, 16, 18, 2,000 plus a month for a two-bedroom. We were able to show through affordable housing online that those were rent reasonable. All of them being far, far over FMR. But again, we weren't bound by FMR. And this was a great program to get people housed fast. However, a lot of the clients were, it was a mixed bag. Some of the clients were like, yeah, heck yeah, I'll live in this really, really nice apartment complex with a uh, one of those pools that like has the disappearing edge and all these like cool luxury features. And I don't really know how I'm gonna figure out how to pay $2,500 a month, but that's a future me problem. And then we had other clients who were like, I would love that, but I know that future me is probably going to be in the like max, $1,600 a month range. But really preferably like 850. So we allowed the clients to self-select there, and it's really important to remember, even though something is rent reasonable, because honestly, you can make pretty much anything rent reasonable. Utilizing Wes's example, for instance, um, in Noblesville, you can make pretty much anything look rent reasonable in affordable housing online, but remember to keep your tenants in mind and your budgets, because really we don't want to set folks up for failure. All right, and now we're going to talk about FMR. FMR is primarily used by like the housing authorities. It's also used by some of our other programs, including ESG, I believe, uses FMR, and some items with HOPWA. So FMR, or fair market rent, is an important term for you to know. Wes, if you could go ahead and open up the HUD website. So in order to find the FMR for your area, I recommend bookmarking this tab if you are someone who runs rent calculations and trying to figure out rent reasonableness and FMR. I recommend bookmarking this all the time. Also, if you are a grant manager or somebody on your team who does a lot of budgeting, or you're the person that we're sending emails to all the time about closeouts and all that stuff, bookmark this page. Just keep this in your back pocket. HUDuser.gov. This is, and thanks Wes put it in the chat as well. Bookmark this, favorite it. This is going to be something that you use a lot. So on this first page, You're going to make sure you're selecting the the correct program year. In this case, we just selected FY 2026, and you scroll down and select Indiana, and then you select the county that you want to serve. And it literally just spits it out for you. And the magic behind how these are calculated is a lot of HUD and people with, uh, economics degrees that are much smarter than me. So I don't know exactly how they're calculated, but generally speaking, they go up a little every year, not always. Every once in a while, you can see that they have gone down in certain areas. And this shows you exactly what that is and then what it is for the prior year as well. And thankfully, there's also a hyperlink. The other thing we want to show you is there is a feature called small area FMRs or SA FMRs. And that is something that you are able to use if you are in an area, maybe you cover like a really big geographic area, um, as many of you do, or maybe you cover an area that varies very widely from zip code to zip code what the rent is. If you're an area that has historically experienced a lot of disinvestment in a certain part of town and a lot of investment in another part of town, something that might be a two-bedroom on one part of town might be 750 and a two-bedroom on the other part of town might be 1750. So the SAFMRs, you're going to find it the same way. And we're going to use the Indianapolis Carmel Metro again. And I'll hand it over to Wes because this kind of goes back to his Noblesville example. But it will actually break the FMR down by zip code. So if you hear the phrase SAFMR or small area FMR, this is what we're referring to on that. It's not available for all counties or all regions, but for those that it is available for, you are able to use that.
So my friend's duplex, we had the gross rent at $1,200, and it was a one-bedroom duplex. So if this unit was assisted by CoC leasing dollars, it would have to be rent reasonable, and it would have to be at or below FMR, which in our example, it proves to be below FMR. And then the other thing we can share with what we were seeing is HUD will use one of two metrics to make your rental assistance budget. They'll either use FMR, or if your project opts to, there's another item called actual rent, which we'll just kind of leave alone for the moment. But this is the screen we were just seeing a moment ago where we have the zip code specific FMRs. But when HUD is devising the rental assistance budget of your project, they're using this like big area FMR. So yeah, let's pretend you have 10 units assisted by rental assistance, one bedroom. So HUD would multiply this figure by 10 units by 12 months to kind of devise your, not kind of, to devise your rental assistance budget. Anyhow, that's just a little tidbit for the agency leaders on the call, but that's just another reference point on how you can use this website. Megan, I'll let you finish off the last talking point on this slide. You're muted, Megan. Sorry.
Thank you. Just as a reminder, the FMR that applies to the unit is the FMR for the start date. So, and I know this can be confusing because the calendar year might not match the program year, which might not match your contract year, which definitely doesn't match the HUD fiscal year. So in this case, you're actually using the date in which you're signing the lease. So if you sign a lease on August 1st, 2026, you can use FY26 FMRs. And hopefully that is pretty straightforward for everybody. And then the last piece here, does the CS compliance team expect or check that subrecipients maintain a printout of the FMR report and client files? No, this is a question that we've received before. And we don't require you to maintain any kind of proof of what FMR calculation you used, because we can just go back and look at what HUD posted, just like you have. So kind of how you do the printouts of affordable housing online, those we need in the file. The FMR printout, that's just extra paper you don't need to deal with. We're into our last section here.
Thank you, Megan.
Go
All
for
right.
it.
Now we're going to talk utility reimbursements. And this was the coolest discovery I made in preparing for this. A very cool HUD notice that I think is a great resource for many of us on the call. So we'll speak to that part now. Okay. Should you be in a situation where you, the agency, owe the client a utility reimbursement, you have two options. And we're going to give concrete examples here in a moment. Option one is to pay that utility reimbursement directly to the client. The other option is that you pay the reimbursement to the utility company on behalf of the client, but there are some what I'll call information sharing stipulations within that. Kind of a communication triangle starts to form. You have to get the client's permission to pay directly to the utility company, and any payment you're making to the utility company, rightfully so, the client needs to be informed of that. So procedurally, this gets a little more complicated, but both, according to this CoC notice, are permissible. So I just want to highlight this resource and share with you what it has to offer. So share it with you. All right. Before we start looking at this, I guess I'll just make one more point. There are some of us who kind of have it a little easier, like all 5 of those CoC utilities are bundled into the monthly rent fee. If you're in that group, then the notice that I'm about to show you really won't be of big interest. However, if you have units where maybe 4 of the 5 utilities are included in the monthly rent fee, but you have one standalone, if you have any units like this, like that, this will be a great resource for you. All right, back to the actual notice. Okay, and as I just said, even in the title, when the client is responsible for utilities is when this notice will be of purpose. So I'm just going to do a quick run through. For our agency leaders, the executive directors, the program directors, pages 2 and 3 will be of, I think, of high interest to you because they outline the different budget line items in CoC funding that can through which you can get reimbursed for utilities. So it's a rundown of operating costs, leasing, and rental assistance. And HUD gives you the TH and PSH perspective on this question, and then the rapid rehousing project. So I found these 2 pages to be very instructive. If you're a case manager, it's probably not in your terrain or scope of work per se, but for the agency leaders, it could be a good refresher, or you might learn a few new insights. Page 4, this is again for you case managers. So bullet point 1 here is where we were in May. How do you calculate the client or the household's income and what they should be contributing to rent or to that occupancy charge? So that's kind of old hat for us right now. Step 2 is what Megan showed in her example, calculating the total of the utility allowances and how that will impact what the client is contributing to rent or the occupancy charge. So I actually shared this resource in May too for this purpose. So I'm going to share it again this month. But if you want a refresher on that, use these pages. The last thing that I'll speak to on the document is they have great examples, 6 of them. So if ever you're needing to use a utility allowance, right, to calculate gross rent or to determine how much the client contributes to rent or an occupancy charge, they, in these 6 examples, basically they've sliced the pie any way it could be sliced. You'll find what you need in these 6 examples. The first 2 are geared toward rental assistance, and the final 4 are for if a client is paying an occupancy charge. Given that our audience is rental assistance heavy, I'm just going to run through the first 2 examples really quickly. And the 2 calculations are a rental assistance example, and some of the utilities are not included in the rent, and they are the responsibility of the client. I think I should zoom in so you can see a little better. Okay, so example 1, the monthly rent is $500, and it's found that the household should contribute $80 toward rent, but their utility allowance for those standalone utilities is $30. And because of that, it will drop their rent contribution down to $50. So in the end, we'll have a scenario where the agency is paying $450 to the landlord and the household is contributing $50. In this scenario, no utility reimbursement is necessary. The second example, the utility reimbursement will come into play. So in this example, $600 is the monthly rent. It's determined that the household should contribute $30 toward rent. But when the case manager does the utility allowance schedule, it comes out to $50. And because 50 is more than 30, the client or the household is actually owed a $20 utility reimbursement. And as we said previously, the agency can either pay that directly to the household or pay the $20 reimbursement to the utility provider. And the remainder of this document is what I was just saying about the 2 options for the utility reimbursement. And they've got some good reminders about client file and maintaining documentation. So yeah, just to go back, I think we've covered all of our essential topics. But Megan and I, we were discussing this week and we wanted to share one relevant piece of bonus content, I guess you'll call it. So the budget line item rental assistance, we just want to remind you that it can do a lot more than just rent payments, right? I think you all know about security deposits and property damage. That's great. And of course, first and last month's rent. Vacancy too. You can make vacancy payments. But the big thing we want to highlight is under rental assistance, you can capture a lot of the labor hours or person hours of your case managers, right? Like the time you spend doing an HQS inspection, that can be reimbursed under rental assistance. The same is true for an income calculation and rent reasonable valuations. Yeah, they could rightfully fit under here, providing housing assistance. And we just want to stress that we have set you up to seek these reimbursements. Here on the screen, you're seeing the claims narrative form for PSH, but I also checked for rapid rehousing and TH, and they also have this section in green where you can seek reimbursement for some of those labor hours that can be reimbursed under rental assistance. So that's just a little plug. We want you to maximize what you're getting reimbursed by the grant. And I don't know, we don't have a strong suspicion, but we just kind of had a hunch that maybe some of our subrecipients aren't utilizing this as much as they could. So a gentle reminder. And the last thing we'll say is a few more things. Everything that we've been instructing on today, checking for FMR, running that rent reasonable valuation, of course, the income calculation, all those things need to be done before the client signs the lease and before the wrap contract or occupancy agreement is executed. So, and just a little preview of the follow-up resources we'll send, the CPD notice, how-to guide, HUD at a glance, and of course the slides and recording. So, yeah, I think we'll open it up to questions. Yeah, so I see one hand raised. Go ahead, Lisa.
So good morning, everybody.
Morning.
I'm super excited that you just shared the news because none of us were aware here that we can do case management hours under for housing search and paperwork and rent reasonable, et cetera, under that. So if anybody is able, I don't know if you have time now or if that needs to be a separate conversation, I would love to know how we need to do that for claims purposes. Obviously, you indicated where that needs to go on the claim form, but I'd be interested in going through that whole process with somebody because I would love to actually utilize that with the claim that I'm working on now moving forward.
Okay.
Yeah.
Go ahead,
Go
Megan.
ahead.
No, go ahead.
I'll just say briefly, so in order to do this, like on your timesheets, you should probably be clarifying which hours are case management and then which hours are rental assistance case management. And that's probably going to be more work for you and for your case managers as they're filling out their timesheets. I know it's annoying to just like have to choose 80 different budget line items, but that's going to be the clearest way for you to demonstrate that to us, and make sure that because if you're sending in a claim and it just says case management, we're going to put that in the supportive services case management. It has to specifically be like time rental assistance, time spent calculating rent or making rent payments, things like that. So, and look on page, I think it's page like 33, 35-ish of the manual. And you can see a list there of all, and the resources Wes is about to send out of all the costs that are eligible.
Awesome. So I've already answered Jennifer's question in the chat, but I will come back to that because that's a good end cap. Go ahead, Kelly, with your question.
There it is. Okay. Couple things. Going back to utility allowances. We have a property that we have several clients in that they, I don't know the best way to say it, they sort of tack on a fee through the rent portal that takes care of trash, water, sewer. It's a flat rate fee that they add. It's paid through the portal. Is that included in utility allowance or no? Is it, how do we've struggled pretty much every time that we've had one of these, and it doesn't math the same in that, it's not, I think what they're charging is actually less than utility allowance is. So we're never sure really what to do with that.
Okay, one clarifying question. Do you know about this utility fee up front before lease signing?
Yes.
Okay. Well, then you could, if you know the figures up front and you know they're not going to change during the 12-month term, you should include the utility flat rate fees into the gross rent calculation. And then check, using that gross rent figure, check that it's rent reasonable. Or if this is a leasing unit, then rent reasonable and FMR. And yeah, no, it's allowed, provided that it's one of the 5 or multiple of the 5 CoC eligible utilities. Yeah, you can proceed that way.
So it should be included in when you're filling out the utility allowance form. You get down to the bottom where the water, sewer, trash is, whatever the utility allowance dollar amount is, we should add that in the utility allowance, or no?
No, you should not add that to the utility allowance. The utility allowance, whenever you have whatever, you'll never have figures other than what's appearing, numbers other than what's appearing on the page. So you'll run your analysis of the units, appliances, and their energy sources, and which utilities are in the rent and which aren't in the rent, and use the numbers on the utility allowance page. That's
I understand that. But when they present this, I'll just use even round numbers to make it easy. They say the rent is $900. There's a flat rate $50 fee for trash, water, sewer. And so do we lump that and make that $950 right there from the top? And then when we run down the utility allowance sheet and we start counting what, is either tenant, that's a tenant responsibility. The tenant has to pay that. That's in the tenant or us or whoever, whether it's leasing or. So do I circle them on the utility allowance sheet?
No, because the water, trash, and sewer, I think I heard you right. Water, trash, and sewer, they're part of the 950, which is called rent bundle. They would not be, that you would not circle those items on the utility allowance.
But when they present it to us, it is $900 for rent, $50 flat rate for the other things.
Okay.
They present it to us as separate. It's not $950 for the rent.
Okay.
The rent is $50 for this flat rate fee, and they tack it into the portal. That either us, if we're paying it, or the client, if they're paying it, would have to go in and pay that separately. You know what I mean? Let's take away the leasing and rental assistance. If this client moves into this unit, they have $900 as rent, $50 as a flat rate utility fee for those 3 things. So I don't know whether or not. So if the tenant is responsible for all the utilities, so it's an apartment complex. So they just pay it. They pay the water, sewer, trash, but then they charge every client, every tenant $50, and that covers the cost of, rather than each individual unit paying for their own water, trash, sewer, the apartment complex pays for it. And then passes that cost on to the client through the tenant through their payment portal. So
Yeah.
it's the tenant is responsible for paying that. To me, I feel like the utility allowance should count because it's something that the tenant is required to pay.
Yeah. Can I ask a clarifying question? Is
Sure.
that like what happens if the tenant doesn't pay that fee?
I'm not sure. Maybe my other two staff can know that based on what's in the leases. I would assume it could potentially end in eviction because they
Yeah.
don't pay. It's a fee that they're required to pay.
Yeah. And so it's not like the water would get shut off because it sounds like it's probably not metered per unit.
No, I wouldn't think so.
Yeah. Okay. Yeah, I think in that case, I think you should include it as the utilities if it is like a separate if it's a separate piece here. Or Wes, do you disagree with that?
Kelly, I wrote down what you shared and I'm gonna type it up and send it to you in an email.
Okay.
And then you can tell me if I got it wrong or
Okay.
like correct me, and then I'll research it. But this one's kind of perplexing because we're in this weird middle ground where it's a flat rate utility fee. And it's almost like it's bundled in the rent, but it's almost like it's not. So
I'm pretty
yeah,
confident. I've not seen a portal to know for sure, but I'm pretty sure it's not a lump 950 that it's in their portal. It shows as two separate
Yeah.
okay. And the
line
lease,
We have a
items.
couple of landlords that are the same way as
Okay.
Kelly's.
Yep.
So yeah.
okay, all right, well, we need to square up our guidance on this. Does the lease read $900 per month? Is that what the lease reads?
I'd have to go look. I can't
Okay.
remember. I'd have to pull one
All right.
and look at it.
This is good. So we have alternatives and family promise that want stronger
Yeah.
clarity on this.
And
Okay.
this is probably something that like I mean every apartment that I've ever rented had that situation. Like this is super common. So I think it could also be a situation where depending on how the lease reads, like you may be able to choose either. So yeah, let us research it more
Okay.
and shore up our guidance on that. Thanks for presenting that.
Yeah.
We do have in just a couple more minutes left. I did get another question I wanted to address if my computer will load it. What if a client's rent goes up and is higher than the FMR? Excellent question. So if you are bound by FMR, um, two things. You want to double check that you're also looking at the increase of FMR because it doesn't have to stay at 2026 FMR. If it's a year later and we're already into 2027, you should be looking at 2027 FMR, not 26. Beside the point, if the rent goes up further than FMR, if you are a CoC specific program and you're administering rental assistance, it still just has to be rent reasonable. It doesn't have to be FMR. If you are a THRRH provider, and Annette, I apologize, I forget which one you are, then you can't pay for that unit. So you have to try and negotiate with the landlord, see if they will come down a little bit to that updated FMR, or you're going to have to move the tenant because it has to be FMR. There are some situations where there could be waivers or other other solutions. Wes, you want to jump in?
If it's assisted by the leasing, okay, because our two of our TH to RRH projects, they have leasing funds and rental assistance funds. If the unit we're talking about is being assisted by the leasing funds, then FMR and rent reasonableness apply. I just want to make that clear because it can get confusing when you have TH and RRH, because really the true dichotomy or split is between leasing and rental assistance. The fork in the road we saw earlier on the slide. So, Otherwise, I agree with everything Megan said. Yeah. Okay, Cindy, yes, the explanation to Kelly's question will be shared with all. So what it will look like is me sending out a follow-up email, and then there might be a second follow-up email with the answer to that technical question. So we are past the hour mark. So I do want to quote unquote dismiss everyone in a second. Of course, you're free to leave anytime you want. Jennifer had a great question about where can you find the recordings. So on IHCDA's website, we have a CoC webpage, and Megan did good work on this. Right, the trainings that we've already done, we have the recording link here, and for the upcoming ones, we have the registration. So we'll reconvene in August for HQS and lead-based paint. And then this will be in the follow-up email too. But if you'd prefer to provide feedback now, we have a JOT form survey. It's 7 questions. Just let us know if you feel compelled, how you like this training and how it can be improved. So, thank you for your time, everyone. I'm going to stick on for another 5-10 minutes, however long people want to talk. But so appreciate you plugging in to this learning opportunity. You're doing great work, so please continue to do so, and reach out if you need anything. Have a good day, everyone, and stay on if you want to talk.
Thank you. Megan, I did have a
You're welcome.
super quick